I want to say that this is what happens with technology. No matter how often we do this, we just had an 11 a.m. call. We just had a 12 noon meeting. Everything worked fine. Came on at 1 o'clock. Sound didn't work. So anyway, glad that it's finally working. Thank you all for your patience. Today is special. We have Shidik with us today.
Hi, Jin. Welcome.
Managed to get him to join us.
Thank you.
Right. So we do this weekly call. This is a Monday weekly call that we do, where we go through a bit about what happened last week. So I think this week Jonathan will be talking about what happened last week. We have Daniel, who will be sharing with us some of the trade signals that he's been firing out. A bit of a review and a learning session there. As I said, today we got Shidik with us, who will be sharing with us his views on some Aussie pairs. And Shidik, why I really wanted him on this session as well is he's been sharing a lot of, he's with Sam Trade, so he does a lot of Facebook Live sessions. When is it again? On Wednesday, is it?
I do it 3 times a week. In fact, tonight.
Okay.
Yeah, so Monday, Wednesday, and Friday.
Awesome, right? So 3 times a week, catch that as well. A lot of good information being shared there. I'm on the sessions as much as I can remember, sending out my views as well. And then I will go through some questions which we've seen being posted in the Traders Club. I'll fire out to the panels, and if you have any questions, put it in the chat there. I'm sure we'll be quite happy to work through those questions and to guide you and to help you with your trading journey that way. So with that delay in sound, let's get started with Jonathan giving us a review of what happened last week.
Okay. Yep, can you guys see my screen?
Yes.
Yep, okay. So yeah, just to take you through last week, okay, I start with Forex Factory because I think last week the market has been pretty still. Okay, there was some volatility throughout the week, but actually overall prices did not move that much, as you find that now we are also at prices are hanging around the support levels. Okay, so why starting here? Because I just want to show you an overview of some news happenings that took place last week. We started with Easter Monday, so bank holiday, the market opened 1 day late. And then throughout the week, we actually have several US news, okay, starting with this called retail sales. Okay, if you can see over here, actual results and expectation have been pretty close. Okay, I believe at this stage, at this situation with the COVID, for the past 1 or 2 weeks, we have seen results actually coming out worse than we expected. Although people are really expecting that certain data will be poorer than usual, but this week we kind of see a bit of stabilization. Some, as like the core retail sales have been better by a bit, retail sales a bit worse, but generally quite in line with expectation. Okay, the highlight for last week probably would be on the Canadian dollar, okay, where it is interest rate news. And for those who do not really follow fundamental aspects of FX, okay, the interest rate news and policies are one of the most important piece of news that we follow, as this actually is the greatest indicator of the impact on the currency itself. So we see that for the Canadian dollar, okay, they have not actually decreased rates further. Okay, this is also partly due to the interest rate already being very low. So you may ask yourself what happens, or what's the impact if, let's say, there's no change to interest rate. Okay, we actually would then go on to look at what the central bank of that particular country have to say. they usually, why the purpose of the press conference, the purpose of the policy report is actually to give us um, some preempting news. Okay, what do they view and think of the current state of the economy and what actions they're going to take moving forward. So some things that has been mentioned is that currently the situation in Canada is being affected by two major things. Okay, one of course COVID-19, nobody is spared. Okay, another thing is because for Canada they trade heavily in oil. Okay, the plunge in the recent prices does actually affect their economy quite badly. So it's also mentioned that even without the COVID situation, um, they still had intentions to decrease interest rate the previous time because of oil prices. And before we move on the week, let me take you to the charts. Okay, you can see that my red line over here, okay, it is the points of when the news release. This is a H1 chart. Go a bit zoom in so that because we're looking at a specific event. Okay, you can see that previously US CAD has been weakening a bit and it has been ranging for about 1 or 2 days before at this point at a support level, and once that news release, I think the sentiment is that Canada is not doing so well, due to the double whammy that they are facing right now, and due to that, when the statement is released, you can see price actually went up, which means a weakening in the Canadian dollar, even though interest rates are not changed. And after that, yes, kind of held this higher price point, and it's now again ranging in the middle. Yeah. So other than that, as I mentioned earlier, like the US news, you see even for the Aussie, employment numbers quite the same, except the employment change was actually better than much better than expected. No doubt lower than the before. And yeah, that's kind of about it in terms of.
Just to jump in there, one of the reasons I think I can't remember when I spoke about this, but one of the reasons why the Aussie employment number was a lot better than we expected was because the numbers was really based on last month's numbers. So before they really saw the impact of what the virus has done or could have done to the market. So everyone was pre-running the negative news. I think what's going to be interesting is what happens to the employment numbers coming up this month, where we see the impact of everyone staying at home and maybe some people even losing their jobs as well. So I think we'll have to see what happens this month.
Yep. Thanks, Jin, for that. Yeah, so like I mentioned earlier, this week has been rather quiet, no doubt volatility in the middle. I think at this point of time, we are a lot of price changes, a lot of market happenings are heavily due to the fact that it's just daily news, daily events that happen. When a certain leader of a country comes out and speaks, whether it's on a certain policy, new policies that they put in place, to combat the virus situation. More so than actual economic news that has been a more routine, as what we are used to. So you see, look at the pound. The red line shows the start of last Monday. You see at this point of time we are actually at exactly the same price as open last week. So the net gain or loss is actually zero. There's not much move, but they are moved in between. This volatility could be due to some some things that were mentioned, like in the US, they have stopped stop funding the WHO. Trump is saying that um, he looks to open up certain states as soon as possible to stop social distancing. And I think that has put the general public in a bit of a risk-on mentality, because it could seem like it's a bit too soon for such practices to be stopped. Okay, and since we're looking at the pound, okay, we also know that UK has decided to extend, okay, their lockdown period, okay, to prevent the situation from getting worse. Okay, look at euro. Okay, euro has been ranging between these two support levels. Okay, no doubt it has came down about, I think, 70 pips here. Okay, yeah, about 70 pips. But in general, nothing much is happening. Still ranging between there. Aussie, like the pound, exactly where it was. Okay, the fluctuations again could be due to certain US happenings, and of course the Aussie employment data. How do I get this down? Okay, Kiwi again. Okay, Kiwi right at this level. Okay, like as what Jim will usually do. Okay, he will put in a zone here. You can see that at this level, prices have came, rejected 1 point here, somewhere here. Okay, it's still hanging around that point. And if you follow our session this morning, okay, we actually have a potential trade setup right here. Okay, if you are interested, please take a look at the video later. Okay, look at the yen, quite the same. Okay, also hanging around this support level. And lastly, I went through the CAD. Okay, it has been the most significant move, okay, due to interest rate news. So yeah, I think that's all for me. Just hope you guys can keep a lookout to spontaneous news happenings that are being released. You can actually find that on Forex Factory on the right-hand side column, okay, where news actually, the latest news are updated there. So I think now I'll pass the time over either back to Jin or to Daniel to go through some highlights for the signals that we have in the last.
So I think jumping in, one thing was quite interesting is as you run through the different pairs, a lot of the pairs prices are sitting at quite close to support or resistance. I don't think it's going to happen this week, possibly next week. I think that as we see prices break out of resistance or support level, we might see a bit more significant moves coming ahead. What do you all think? Do you think that could happen, or through some nods of heads? All right. So while we get everyone a bit more warmed up, let's get Daniel with his 110% energy online, sharing his signals from last week.
Okay, let me. Oh, I can't share my screen. Why? Host disabled participant screen sharing.
Hold on, let me get it for you.
Okay. The wonders of technology. Okay. Can anybody?
Actually, can you help me with that? I made you the host and suddenly I'm nothing.
Yeah.
Can you share now?
Okay, I'll try now. Oh yes, I can. Okay, great.
Okay.
Okay. Can everybody see my screen?
Yes.
Okay, great. Okay, let me put this up first. Okay, now quickly now on the 20th of April. Okay, I signaled 9 signals out. 6 were good. 3 was hit the stop loss itself. I'll be talking about the top two signals itself. Okay. Okay. So on the US yen, I like this kind of charts because it really follows. It was perfect conditions itself. So you can see that there were no previous news or the next coming news last week itself for the US yen. So you can see the trend is more or less a downtrend here when I was looking at it, a downtrend. And it broke through the support zone of 108.3. So when you broke the support zone, I was waiting for it to come. It falls down here, and I sent a signal out at 108.06 to sell itself. Okay, and you can see the fast MACD and slow MACD was just turning. So I actually waited for the crossover of the MACD to be certain. So I see the actual real nice triangle out rather than here, because here it just touch and cross, so it didn't. I was checking whether it was a false breakout or not itself, but the cross came out, so I decided to click a sell. So this is one of the confirmation I look at for. And then if you look at it, there were it hit the TP3, which is 60 bips. That was great, but you can see that if you are in the LCMS Traders Club, I actually, when you hit TP1, I suggested to close because of long bearish candle, and it was outside the Bollinger Band. And once you know outside the Bollinger Band, 95% of the chance it will go back in itself. So, and it really indeed went back in itself. So at TP1, I would have exited if you have a chance. If it didn't, then it comes back to TP2. At TP2 itself, I actually, in the LCMS Traders Club, I suggested to hold because it was still in the Bollinger Band and the momentum was still strong to the sell. You can see MACD for both the fast and the slow, even stochastic, and the PISA tells me that there's still momentum to sell. So I recommended to hold and further notice and to see more continue monitor. So it really stayed within the Bollinger Band. It fluctuated up and it hit TP3 at this candle here. There also another long bearish candle quickly out, and I signal said that, hey, I think it's time to close because we hit the target and I couldn't be sure of what's going to happen later on itself. But here's the question in the topic in LCMS Traders was that, hey, within the hour, you see I traded here, within the hour it hit 20 bips, or would you wait for 11 on the next 11 hours to hit the 40 pips, or even another 60, or let's say for 60 pips, 29 hours? Which one would you prefer? To be very honest, I would prefer at TP1 to exit out, and then if there's another opportunity, like for example, it bounced back off, I see a engulfing candle here, bearish candle, I would maybe have entered in again and just to follow with the trend itself. Okay.
So just to jump in, I've just put in that poll. I didn't know you're doing this question, so I've just quickly typed up the poll. Okay. 20 pips in an hour, 40 pips in 11, or 60 in 29. Let's get everyone to respond to that as well. You can continue.
Okay. Okay. Let me continue then. Where's my I just flipped too much. Okay. Okay. And then so I'll continue on. So the other trade was the Euro Pound. I sent a signal on the 14th of April itself. So this is my support resistance zone itself. It broke out. Okay, it broke out, and I was waiting for it. And then it looks like it's closing up. So I didn't send a signal yet, just in case it's a false breakout itself. You can see here as well. So I didn't want to do so. But when I later part, I see that there's a crossover here, and the momentum is still strong on a downtrend. This candle, if I decided to the fast MACD indicate a sell. If you look at it closer, this candle here, it started to cross, and then I see the triangle forming as well. So I decided to click a sell trade. Okay, so interestingly enough, it was actually one in the 50s is a 50-minute chart just to show you how fast things have moved actually. So you can see that it actually shoot all the way down to 17 pips profit before it quickly, and I was still holding on itself. If you see the 1 hour candle, even the 1 hour candle itself, it actually shoot all the way out of the Bollinger Band. I was waiting for it to hit about 20 pips, but it didn't itself. And then suddenly the pound weakened and the euro strengthened itself, and it shoot all the way up within an hour or so, hitting the stop loss itself. At that point in time, then I went back to check. There was some news on well, the increased number of coronavirus hit in the UK itself. And so this kind of news is, to me, is unexpected. I cannot plan for it myself. But the learning outside the candle is, if you are monitoring the trade itself, you can see the 1 hour candle was a long out of the Bollinger Band here itself. So when it's so far away from the Bollinger Band, as I mentioned, because Bollinger Band 95% of the time price will be within the Bollinger Band. So if it goes so strongly out of the Bollinger Band, there is a high chance, very high chance, they will go back inside the Bollinger Band itself. So, and which indeed it did, and there was some news in this case. There was some news itself. So on hindsight, always, easier to say than done. But if it goes out of Bollinger Band, there is a possibility for me to consider to issue a close for this trade itself in future. And you can see the Bollinger and see the MACD was quickly turning up itself. Perhaps I could get out of the trade as well because of the news itself. Yeah, so that's all for me, Jin.
I'll put you on the spot, Daniel. Do you think that this is something that you'll be doing for the Traders Club specifically, where you might not just signal the take profit levels, you might actually signal when in between, even before a take profit level, that you might signal that it's a good time to close?
Yes. In fact, I've been thinking about it, and for example, in this case, after I review myself, I am thinking of also issuing, if there is a chance, only the traders, LCMS Traders Club, that if, for example, such cases itself, I will issue a premature exit signal out as well.
Premature sounds a bit aggressive, but yeah, okay. I know what you mean. I know what you mean.
Okay. For lack of word for myself.
Great. Any other questions? I see the chat going off. Okay, I see some of you answering in the chat. Hey, put it in a poll. Put it in a poll. All right. Okay. Thanks for that, Daniel.
Okay.
So now I would like to really pick on Shirik's mind, on the pairs that he'll be sharing. Actually, you might want to share charts. Let me just give co-host so you can share some. Oh wait, something happened. Yep. So unmute yourself and let's see some charts.
Right. So just okay, give me a moment to share. Yeah?
Hey, by the way, can you give us a quick 1, 2, 3, 4, 5 minutes background about yourself, just to introduce yourself to everyone here?
Oh, I actually did an intro earlier.
Oh, you did already?
So,
okay. If you did,
yeah, I did.
Okay.
Okay. All right. So let me just share my my screen. Right. Can everybody see?
Yep.
Okay. So actually I've been eyeballing a couple of actually a few of the Australian pairs. So I'm expecting Australian dollars to weaken to weaken. Okay, and I was actually looking at Australian New Zealand this morning, and I saw the looking at the top here, and we I saw this price moving at the side. Because the price has really moved quite a bit. Okay, what I would like to share is this Australian Canada. Okay, I'm not sure if the same as me. I love to hear okay, but Australian Canada, its price has has been moving sideways for so this price level, or quite a well controlled. Then is that okay during
Shirik, I think your audio is breaking up a little bit.
10 March, where there's I mean, I did not go and check whether any
Oops, we lost him. Did we lose him? Oh no, what happened?
Yeah, we lost him.
Yeah, I think we lost him. Yeah.
Okay, if he jumps
I'll
back
get him.
in.
Yeah, I'll get him back on. And,
I know, Ivy. Monday tech problems. Are we being hacked? This is on Zoom after all. If anyone is hacking this, please send me some Bitcoin. Okay, so with well, as we try and get Shidik back on, I really wanted to find out more about those trades to watch out for. Oh, hey, you're back.
Hey, sorry about.
Oops,
Yep, so sorry about that.
no worries.
Can you guys hear me?
Yes.
Okay.
Nope.
Australian Canada.
No, you're still breaking up a little bit, man.
Okay.
Okay, better.
Okay. Mic
Good.
test.
Yep, you're back.
Okay. Just okay. Let me. Oh, it worked. Okay. Can you guys see?
Yes, good.
Okay, so I'm just gonna make it quick, just in case I drop again. All right, so I've been eyeballing this Australian Canada for a week now, and it seems that the price has been moving sideways, been constipated for a while, and this price level has been on pretty well. In fact, right now it's you see a bit of. So looking back, it is at this price level where I see significant what's the selling point. So I've not I did not go back and check, were there any specific news that caused this drop. Okay, but looking at just this area balance of I see the selling that could happen. And on top of that, I'm also looking at this monthly pivot points. Okay, so personally, I use pivot points a lot, especially for positions. It is, I mean, personally, for me, the point, it gives me an accurate point of where is the highly probable turning point. Yeah, so looking at it now, if for those of you who so on, you can this could example, but this is it looks like a rising wedge. Expecting it, with a higher of price rebound. Yeah, so of course I'm not putting any trade currently right now, but of course I'm waiting for like what Jin always says. I'm waiting for a trigger. Once prices start to move lower, making lower lows, it is then I wait for the for the retracement, and with my other indicators in place, that's where I would like to continue the trade down. Most likely around all the way to the about 0.87 price level from there.
Oh,
so
good.
that's my view on and I mean I personally look at a lot of what's this correlation as well. I'm not sure you can see my screen. So whenever I have a trade happening, all right, whenever I have a trade happening, can you see?
I'm looking at your chart right now.
You look at my charts?
Yep.
Okay, can you take a look at this?
Nope, still the same, still the chart.
Wait.
I think you're breaking up again.
Okay, for Australian Canada, it's highly correlated with Australian New effect. Currently, it's about. Okay, can you hear me?
Yep.
Yeah, I don't know, something's wrong with the Wi-Fi. Whenever I see a trade, right? Hello. Hi.
Hello. Okay. I think Shidik, let's try and get out of the screen share. I think your connection will be better that way. We just talk through the whole process.
Okay. Is it better now?
Maybe, possibly.
Okay. So of course I'm waiting for a short opportunity to and
Nope.
personally I always look currency correlations. So
Okay, as we go through, it's really Monday tech problems. Maybe what I can, Chidik, if you can help me put it in the chat. I think I'm trying to do a bit of a summary of what you were looking at. We're looking at Aussie CAD with a possible rising wedge and, oh, there he goes. Possible rising wedge and a downward with a look for a downward move. So because of that, we've got triggers for it to be selling downwards. If someone can help me put in the link for the correlation table, you can put the link in for the correlation table in the chat so that if anyone wants to be looking at possible currency pair correlations. Shidik, if you have the link for the correlation table, you can put it in the chat for me so that we can share that, the investing.com website. Yep, there you go. Oh yeah, cool. That's my FX book. Then, so correct me if I'm wrong, you were saying that we're looking for Aussie CAD to be looking to sell because of a bit of a rising pennant flag. Okay, he's frozen a bit again. All right, so we'll try and sort that out, but I wanted to get to some questions today. So we have Traders Club, where the LCMS Traders Club on Facebook, go search for it. You're all there actually. This is only open to members on LCMS Traders Club. A lot of you have been commenting and chatting in there. We've seen a lot of questions. As much as we could, we replied to the questions straight away. So I picked out a few other questions that I've seen, and that was probably easier for me to reply through this video rather than type it up, the whole long thing. So one of the questions, if I'm not wrong, I think it was from Robbie. Hi, Robbie. Right? You were asking about a quick rundown of risk management and lot sizing. Your winning versus losing trades are about the same percentage or better than last month, but you're at a loss this month, right? So I'll actually get everyone in a panel to unmute yourself. We can have a discussion on that. So Robbie, are you changing your lot sizes for different trades, or are you keeping it at the same lot size?
For this month, I changed it a little bit because I asked the group what they do for lot sizing. They change depending on the stop loss, but a month before, last month, I just kept it at a constant lot size.
Okay. So that's one of the things I would suggest is I always keep trades towards at the same lot size. I know a lot of people do it differently, but I keep it at the same lot size because that way, when I approach every trade, it's the same to me. I keep as many constants as possible. I don't think that, this trade is 0.1 lot and this trade is 0.5. The 0.5 is 5 times more important than the 0.1. Right, so I will always keep it at the same, and then because of that, then I manage my stop loss. I'll be like, if I have it at, say I don't trade at 0.5, but if I trade at 0.5, or if I trade at 5 lots, right, and my stop loss is 100 pips, can I take on that 100 pip risk? If I cannot, then maybe it's a trade I don't take. Maybe it's a trade I go find something else instead of changing lot sizes and then recalculating everything and then messing with that other calculations again, right? Any other views? How do you guys do your lot sizing and risk management?
maybe I can come in. Okay, so Robbie, I think we are looking at two different styles here. Okay, it depends really on how your emotions are when the trade actually runs. Okay, if we go on like let's say this month, we look at this month first. You are saying that you adjust your lot size according to the amount of pips, right? That your stop loss allows you to do. Okay, that one focus more on capital and capital percentage, which means that if let's say you fix every trade to have a 2% risk, okay, it is more on the dollar value of how much is a 2%, okay, versus the kind of trades that you take, which means that you can actually take more trades because some trades will have a bigger stop loss. Probably that would mean more longer term. Certain trades will have a smaller stop loss, which are shorter term trades. Both you can take because why? Your risk is limited to, let's say, 2%. Okay, it's just that for a longer term trade, you probably enter at a smaller lot size because your stop loss is probably wider compared to a shorter term trade. Okay, and then it becomes, in terms of the, how you manage your capital, it becomes actually, everything is based on percentage and risk reward ratio, which if you find every trade, let's say 1:1, you are either up 2% or you're down 2%. You find a risk reward to be 1:2, you're either up 4% or you're down 2%. Okay, the key, it sounds very nice, but the key to actually sticking to this, okay, is to actually let your trades play out to the end, which means that you have to stick to your TP and stop loss very religiously for the percentages to work out. You get what I mean? Because if let's say you are going to come in halfway, like if you take a longer term trade, and halfway you don't feel like waiting anymore, because like Daniel says, or sometimes to wait for 60 pips, you have to wait 30 hours. Okay, and if you don't actually keep with that, he will make this percentage gain quite meaningless because you will not be up 2% or down 2%. You maybe be down 2% or maybe you'll be up 1.5%. And with this new variable, okay, you will find that you may be closing more winning trades, or even have the same percentage, but you end up actually in a net loss because when you lose more. Okay, and when you make, you actually don't make as much. But for shorter term trades, okay, it may play out as you wish. Okay, and if we go to the other way, like how Jin and most of us manage trading with a fixed lot size, okay, the difference is you will find that there will be certain trades that you are not able to take. Why? Because if you try to limit your risk, okay, you will find that some trades, the stop loss level, okay, based on your fixed lot size, your risk appetite is just not there. If let's say you're trading at 0.5, okay, and it's 100 pips, okay, you're talking about $500 here. So if maybe this trade will not be able to take because $500 may just be too much risk for certain people, and it also depends back again to your capital sizing. Yeah, so this is the difference, and I think end of the day is up to you which style you think is better that you are more comfortable with, okay, and how you actually react when you enter a position. Because if you are going to be say that, okay, I'm not going to take a look, I'm set my levels, I'm going to follow it religiously, chances is when you tweak your lot size, okay, when you tweak your lot size to manage your risk at a fixed percentage, you'll probably do okay. But if let's say you enter a trade and you're going to keep on worrying and thinking of getting out early, okay, then that will definitely mess up with the numbers. And with the additional time you spend on calculating this lot size before you enter the trade, you may also be a bit late, to enter the trade, and you will end up missing easily 5 to 10 pips there. Yeah, so that is another thing that, before you enter the trade, you are giving yourself more things to think about. And when you're late, then you think again, should I go in now or am I already late? And then when the price bounces, and then that will all affect your exit strategy. Yeah, so before I let other people of the panel talk further, Kim Hong, are you on the mic? Do you have audio there? yeah, I think he does. Game Hong.
Why? What do you want?
Okay, never mind when he's ready. Because I think months ago, Game Hong actually came to me with a similar problem. Okay, I think he's saying that also he usually lose more. Okay, when he take a loss, it's bigger than his wins. Okay, but in terms of the winning percentage, it is still quite healthy. So I think he has overcome that problem. You know, I wanted him to share his experience, like what has he tweaked, but I'm not sure whether he's able to. Yeah, if not, I
Ivy
think,
also just posted that she's suffering. She's going through the same thing, having big losses and small wins. So it's a lot about you know, managing that trade mentality. You know, not over focusing on different pairs or different trade sizes, that kind of things. And then a lot of times when you're trading live, you know, you tend to, when you see money, you want to get out because, hey, it's your reward. You want to realize your reward quite quickly. But then when you see a risk, when you're losing money, you say, no, it has to turn back down. You know, you keep holding on to your trade until you hit your stop loss or even move your stop loss higher. So that's the usual when you first start and you try to get the perfect trading results, which is to always win, right? So I think it's a bit of understanding that you can't win all your trades as well. Yeah. Actually, I'll pick on, since we have Shirik back, I think without screen sharing, you seem to be okay. What's your views on a lot of people, you know, they win small amounts, but they lose big amounts?
Yeah, I think similar to, I get this question a lot as well from my own members. And yeah, the instant gratification that we always want to get. So that's why for me personally, my approach to trading most of the time is binary. And in fact, I've always advised my members to be binary because, you know, it's either you lose your expected 1 or 2% or you win, you know, whatever that you have already anticipated. And it's very important that we have to keep to the R multiples. That means you have to always win more than you lose. I think even if it's by 0.3, you know, 0.3% or even slight edge. Because even if your strategy is, you know, if let's say your strategy gives you an edge of, you know, let's say 60%, that means out of 10 trades, you're winning 6 out of 10. And if you're going to win more all the time as compared to losing, yeah, you'll always be profitable in the long run. So I think, you know, for me, the holy grail of trading is always that your consistency on following rules and, you know, your risk management. Yeah.
Awesome. And by the way, just to clarify for all of you who are starting to get excited now, when Shirik says binary, he doesn't mean binary options.
Yeah.
just to clarify, it doesn't mean go start trading in binary options because that's the worst thing you can do.
Right.
Right. Anyone else? Daniel, Jim, or Kenneth? Or just one of you? Anyone? No? Okay.
Yeah.
Yep.
Okay. So I'm more with Jonathan and stuff. That's obviously because we are all trained together. But my minimum, as I said, Shakit has said that usually I have an edge in my trading, so I will win more the times I win more and stuff. So my stop loss to take profit will minimum be at least 1:1. It will, you know, it'll be 1:1, so that whenever overall to me, so long as overall, as also Jin has mentioned, you can't win them all. You must be expected to lose, or so you have to follow your rules trades. You also expected to know how much you can afford to lose. So I try to minimize my emotions itself, so I do not get out until roughly about minimum 1:1 before I consider get out. The only time I exit out early is when there is unexpected news, and if there's a chance for me to get out, sometimes I would, because you know it's the unexpected news will cause a drastic change itself, so I will get out itself. Most of the time, I will leave the trade as it is. That's for me.
All right, awesome. Thanks, Daniel. Okay, we had quite a heavy couple of questions there. Let me ask. Oh, did she just go off? We had that question coming up. What's the one book that you recommend for anyone to read in trading? Like Let's start with Jinwei.
I think I read the Trading in the Zone or something. Yeah, Trading in the Zone. Is it Trading? Yeah, Trading in the Zone. I think that's quite a good book, especially for psychology, for trading psychology, like all these questions about stopping early, not following rules. That book will address a lot of psychology issues. Trading in the Zone, yeah.
Such a good book, you forgot the title of it.
Yeah.
All right. Kenneth, what about yourself?
I think the only book that I read is only the LCMS course book, and not any other.
You get 100 points. You get 100 points for that.
Yeah. So in any time that I'm confused on everything, then I just read it back and go through everything again, refresh myself, and get back myself into the whole situation.
You win the prize of 100 points for that answer. Don't worry, the points you can't use it to claim for anything else.
Okay.
Shidik, yourself?
Right. I personally, I like the Market Wizard series because it is like a compilation of of all the traders' habits. Where he does all these interviews, and I think that's where I learn a lot about. Hey, I see what's the similarity between all these very successful traders is always about psychology, and it's always about having them to follow their own rules. That's all. Yeah.
Okay, John.
Sorry. Let me
yeah.
just cut in. I have a meeting that I have to
Sure.
go off to. So thank you guys for having me. I hope to come back again to share my thoughts. Right. Thank you so much, Jin.
Awesome. Thanks, man.
Thanks. Yeah, so anyway, regarding books, I think the titles that I've read are being mentioned already. But I just want to say that with books, right, for those beginners, I would suggest that you don't read too much books before you start trading, because that's what I did. Technically, you paint a very ideal picture of what trading is going to be. Many books actually focus a lot on psychology. They can't do much on the technical aspect because the methods of trading are always changing, and the book doesn't change, right? So you'll find that some stuff are outdated. Okay, so many of them focus on philosophy and psychology of trading. Maybe it would be better to start trading first. Okay, get yourself educated, get yourself some guidance, and then when in times of like down moments, okay, maybe you have a losing streak, maybe you're just sick of trading for a while. Okay, you take a step back. Okay, stop trading for a bit. Go and read some books. Okay, that will actually re-motivate you. Okay, and you actually find that a lot of concepts in there are more easily applicable now because you have already understand how demanding trading is, and you can actually apply that to your trading in a better way rather than reading everything first and then diving in, and you will not know what to apply, and then you get all confused. So yeah, that's just my advice there on books.
What's your title?
I read. I said I didn't have a title, right? Like Trading the Zone. One good trade is good.
Okay.
Yeah, one good.
Thanks. So Daniel, lucky last. Show us your collection of books.
Okay, I'm different from Jonathan a little bit. I perhaps maybe the same also Jonathan. I read a lot of books in Forex, and Jonathan has a point that it can confuse you and gives you the ideal picture. It looks as if it's a sure win itself, but you really need to know some fundamentals and technicals of when to enter, what the conditions are, which actually that's where Jin has actually mentored me very well. So to start the term, I would recommend, I just put in the chat itself by Kathleen Brooks. After all the books itself, I find that this book is a very good book for the basics. Because it talks about the fundamentals, talks about the technicals, how do you do it, that kind of stuff. But again, it's not an ideal condition, but it does give you some form of basic foundations if you really need to reread and revisit yourself and to confirm what you are thinking when you're doing the trading. Yep, that's all.
All right. Okay, so I think we've just gone on a bit longer than we expected to for this session. I think we'll probably draw an end to the session here. for this weekly call. I think what we'll try and do from here onwards is I will start picking out all your questions in the Traders Club, and then if we can answer them quickly on the chat and on the comments, we will. If not, then we will do them more in this session. So treat this session as a bit more of a panel discussion where we answer your questions and guide you through your trading journey. So the best way, I think I typed it up in the chat last night, in the comments last night as well, the best way to take advantage of the Traders Club is to keep asking questions, keep firing the questions there. If we don't answer them on that spot, we will answer them during these sessions as well, unless it's something ridiculous that I cannot answer. All right, so we'll catch you all next week again. Take care, trade safe, and thank you for attending. Bye.